It's Wednesday, April 2nd. Let's level up. Liberation Day, tariffs announced. The markets initially liked it. We saw it pop up to resistance, but then immediately sold off and had a pretty large collapse after hours. You cannot follow the financial media on this because they all have political bias and they all are rooting for President Trump to fail no matter what the consequences is to the American people. But fortunately for us, we have actual measurable technical levels that we can use to trade. First and foremost, keep an eye on the VIX tomorrow. 3 days ago, which is basically where price came down to, we saw a VIX top at 24.8. If that can clear and hold, the chances are we'll see 26.51, 28.32, 29.76, and somewhere into the 31s, depending on how long it would take to get there, which would be channel high. Probably a good opportunity up there to sell some out of the money premium and start buying the dip. Now, if the VIX can't make a new high and price makes a new low, that could be a tell that the breakdown is false. I'm going to talk about look below and fail again in a moment, but that is something to note. We are going to want to see for price and volatility to confirm for a move sustainable on the downside. If they don't jive, it could be something that's suspect. With regard to the ES and the NQ, we saw a plunge back down to the 5,500-ish level and we're rallying. For me to say the decline is fully arrested and where I do actually expect there to be some resistance, I think we would need to get over 56.1075 to 56.2275. If the bulls can do that, the decline is likely arrested. Now be careful if we have a flattish to uppish open because everyone saw the plunge in the after hours and then we'll take that opportunity to sell. And we would likely retest or make some type of a higher low before things could level off. Now, if we do open lower and we get a still lower low, there is the possibility for some recovery, at least at the open for short covering. I am watching very closely the 200 MA 30-minute. That has been a very key pass, don't pass line for us on both the up and the downside. Currently, it's 56.47 and declining. In the Qs, 19,496 half and declining. Now the Qs also have a similar situation here. Their apples to apples, by the way, to the 56.1075 would be 19,316 half. So that is the area that needs to clear, and I do expect that zone to be some resistance. If we do continue to leg lower and we take out the overnight lows, which would be the 54.81, we could see 52.80.50. And on the Qs, if we were to take out the 18,819, we could see 18,092. With regard to SPY, we had a look below and fail 3 sessions ago of the 549.68, which was the reference low from 313. If that is taken out, there is the very good possibility that we do continue articulating lower. The next big key levels on the downside would be 537.47 and the 2 times range of our most recent consolidation range as defined by the 313 low up to the 326 high, and that would take us to 523.03. And if we did the full Monty down to the 2.618, that would be 506.56. Basically refilling the 5.2 gap of 505.03. My thinking here is that we'll know very quickly if we do break below that level. So if the bulls are able to get up over and maintain over 549.68, to me this would just be another look below and fail, and the probability of rallying back up to 575s to 576s increases because it now would be another look below and fail. If we have the look below that actually fails, meaning the look below and fail fails, I do think we articulate down to those said levels. So far today in the RTH session, the 20 MA was resistance at 564s. So if you are long SPY shares, you could sell those same week or next week out of the money calls if there's any juice to them, depending, of course, where the VIX is. Qs are similar. They need to get up over and stay over the 466.43. We're currently trading below there in the after hours, also pirouetted, hit the 20 MA and failed there at 479.22 and falling. If the look below and fail fails, like we had discussed in the SPY, the apples to apples decline levels would be 439.24, which would be the 2 times range of the consolidation as defined by the 313 low to the 325 high, and then the 2.618 would take us down to 422.44. On the upside, if we're able to hold the 466.43, I would imagine we'd trade back up to the 20 MA at 479.22 and maybe even make a run back up closer to the 200 MA, wherever that is, currently 494.48 and falling. We're seeing a lot of downside action in the big cap tech names. Nvidia is falling victim to that as well, but interestingly enough, they have not broken below the 104.77 reference low that we inked on 311. If that does fail, the next big level on the downside is 100.95, and it wouldn't surprise me to see a larger market cascade to make a move down to 90.69. So if you want to do a 1-by-2 put ratio playing for that, or even 1-by-1-by-1 with some lower strike, maybe down closer to 75 if you want to go longer dated, I'm good with that. But if we don't break below the 104.77, I do think there is room up to the 113s and possibly even move into the 123s. Apple getting hammered after hours, obviously fears of tariffs. Currently trading above the 208.42. That area needs to hold. If that does fail, I've told you before, I think there is a risk back down to the 196.38 to 199.62, which was the big breakout range before we had this big up move into the end of the year. And that, of course, was post the 8/1 earnings. Google and Amazon were getting hit after hours, and I grant you that they both would be exposed to economic downturn risk, but they don't have the China risk like other stocks do. Also, trading still above our reference low of 150.66. Bulls will need to defend that. If not, we could see the 141.18, which was the 315 gap fill, and maybe make a run down to the 130s if things were to soften up there. But a lot of these stocks are already down a lot. If anything, I think Amazon could be a prime beneficiary of Temu and Shein seeing more increased taxes, particularly on their shipping fees. Keep an eye on how this trades tomorrow. Bulls there will need to hold the 188s. I'd view anything still above the 184s as still okay-ish, but I'd feel better above the 188s. And then, of course, 195.37 would be the key breakout zone. We did test above there today, but rejected. So basically, ping from 195s down to 188s. We're actually trading a little below there now. Gold strong, as we've projected. I've told you before, I think we see the 292.62. We're very close now. I would use that opportunity to trim some gains, and maybe even if you're in calls, turn them into call spreads. You could sell some 300s as the upside level. If we have a opening gap up, just use the opening 5 or 15 minute low as a stop. Bitcoin pulling back here as well in the after hours. We did test above trend today, but ultimately closed below it. I'd feel better if we were able to hold the 20 MA in the RTH session over 84,492, and then I would feel much better with a long play if we got over 85,655 to 85,890. If that clears on the upside, I do think we're probably off to the 89,500 to 91,455. On the downside, the 200 MA has been the key support. We saw that on 311, currently 78,364 and rising. Generally speaking, market is likely to see a little bit of a down open tomorrow. Keep an eye on reference lows. If the look below and fail fails, we're likely going lower. If we see another look below and fail, it would show me there are no new sellers below these lows, at least not in the regular trading hour session. After hours doesn't count as much because that tends to be a little bit knee-jerk, although I have told you in recent years I am putting a little bit more weight on the after hours trade, but the RTH is really what counts. If we can hold over those levels, I do think the potential is for a rally. Stay leery of any up open or flat open, because I do think traders saw this dump in the after hours, and there will be the temptation to retest it and escape having seen downside. Look to see if the VIX confirms new lows. Price in VIX confirms new lows. I think we do go lower. If it doesn't quite jive, then I think there is the potential for that rally still higher. Like and follow for more.